Shares in Asia are mixed while European markets are down as investors wait for a string of reports on rising prices in several major economies. The most closely watched data will come out of the U.S. later on Tuesday. The Labor Department in Washington is expected to report that inflation surged past 8% in March. That would be the fastest in 40 years. A similar record-breaking number is expected out of the UK later this week. And it follows elevated inflation readings in places like China, the European Union, and India. This is all a reflection of the heavier burden consumers have had to bear around the world. Rising prices are mainly linked to the higher cost of energy, driven up by Western-led sanctions on Russia, a major exporter of crude and natural gas. Now for more, let's go to Danni Hewson. She's a financial analyst at AJ Bell in the UK. Welcome back to the program, Danni. Now, there's obviously an extraordinary event that's influencing prices, but what are the other factors that's led to higher inflation in pretty much every corner of the world?
I think one thing that a lot of people aren't really understanding is that the inflation we're feeling at the moment isn't linked to the situation in Ukraine. This is all a hangover from the pandemic, of course, when economies went from 100 to 0 and then everything stopped. And then when demand started to pick up again, then we had to start turning taps back on. If you think about oil production, when the prices fell so incredibly low, production had to halt. And when the economy started to pick back up and demand started again, then the pace of turning those taps back on didn't keep pace. We are, in this next set of figures, really finally going to be able to see exactly the impact of what happened when Russia invaded Ukraine at the end of February and the extra impact that that is having on consumers. But yeah, I mean, at the moment, if you think about how those supply chains were snarled up, how shipping costs soared, all those things are filtering through and making things more expensive for the consumer.
So yeah, as you just laid out there, these inflationary pressures seem to be more structural than what we've seen so far. So are there any quick fixes available for policymakers?
It is incredibly difficult for policymakers because, of course, when you start talking about dealing with inflation, all of those monetary triggers that central banks have to use, they take an awful long time to start working their way through. You know, think about raising interest rates and helping with bonds and things like that. Then it does take a long time. Obviously, a lot of people have started to talk about whether or not there could be more oil supply, whether or not OPEC could turn on the taps a bit more. That potentially would help in terms of the oil price, but that is just one part of the puzzle. And while geopolitically there is such uncertainty, of course, we've also still got issues with COVID in China, which is causing increased pressure on those supply chains. There's very little really that governments and central banks can do right now to help.
All right, a very grim outlook after just coming out of recession because of COVID. Thank you, Danni Hewson out of the UK.